All right, guys, what is up? Today is currently Monday, and I want to just go ahead and talk about my fair value gap strategy slash demand zone slash methodology that I'm using to trade gold. So, if you're a futures trader or forex trader, this video is for you. Um, I posted this trade that I'm about to take in the Discord. If you guys aren't in, the Discord is it's free, by the way. So it's a free Discord for you guys to all join. There's not that many members in it. There's only like 35 members in it. There's people active right now in the chat. Um, I have a YouTube section, all that stuff, but that's not the point. The point I wanted to get into this video is the fair value gap and gold strategy. So the first thing you're going to do to find better setups on golds for you to actually trade is let me show you guys this chart gallery. So the first thing is this is a chart gallery you're looking at of the different types of, well, not different types. There's only two types of setups I trade order blocks and I trade fair value gaps. This is a chart gallery of gaps that you can look at. And these gaps are the type of trade setups, like I said, one of the setups I trade. And my setups mainly look like this, right? So if I'm selling and there's a big sell off, I sell the gap high. And if I'm buying and I buy the gap low, like this one. So the first step to finding your gaps, guys, is actually going to really heavily be market structure. So market structure allows you to find gaps with precision and preciseness and allows you to execute your trades way better. So a key for you guys is if you go on the money calendar, which is it's Forex Factory, but I call it the money calendar. It will show you economic events that are happening, and you can filter out the medium to high volatile or high volume events that are happening. And those high volume events add expansion in the market. So when you're trading gold, like for example, let me show you the actual example. So the reason on my watch list, if you look all the way to the right, you can see that I only have two trade setups. And the reason why I only have two trade setups on my watch list is because it takes out all the noise right here. It takes out all the noise and allows me to focus my eyes and focus my brain on only two different types of trading setups. When I try to do multiple different types of trading setups, more than two, it kind of puts me in analysis paralysis mode, and I'm not actually trading or doing anything. But when you're actually using two setups, I can say, hey, I found both setups on two of these currency pairs, Bitcoin and gold. So I have the option to take two trades max per day. If I have six setups, I'm going to end up taking all of these trades that I shouldn't be taking because I didn't I'm going to end up taking all these trades that I shouldn't be taking because I have six setups that I'm trying to take, and then that's going to blow your account. So trading trading one to two to three setups, or having that to focus on is ideal because it narrows your focus so you can have laser focus and focus on the high quality setups and not taking every single winning setup or every single setup that you see. So right now on gold, we're on the 4 hour time frame, and the thing about this is you can clearly see the order block that just formed right here that the blue arrow is pointing to. It's on the 4 hour time frame, and that order block represents demand. As you can see, if you look to the left, you can see all these blue candles forming, and all these blue candles were small blue candles, right? These were all tiny blue candles made by retail traders and some institutional movement. But if you look here, the largest move that happened here was on most recently on the 4 hour chart. So about 12 hours ago. And sorry about the camera, guys. Sometimes the camera not cuts out, but it actually will freeze when I'm trying to speak. I don't know why it does that. I've been trying to message Loom about that because that's what I'm using to record my screen. But yeah, so gold on the 4 hour, you can look at the 4 hour. We see all this demand that was added, this giant blue candle. The bigger the candle, the bigger the move. And the bigger the move, that move was most likely created by smart money. Smart money is a nickname for people in the market that control the market and have the most capital, which is the reason why they control the market. So if I have millions of dollars worth of trade and I buy gold right at that where the blue arrow is pointing to, you are all going to see, no matter where you're on the world, that on the chart because I have so much capital, it affects the actual market and it moves the market. So money moves the market, and the ones with the most money control the market, therefore, because they have the most money. Now, you don't necessarily need to be focused on their exact schedule every single day and every single week. But simply you going on the news, or if you trade forwards or futures, and you going on Forwards Factory to see if there's any economic events. Like, for example, if you're trading futures, the only economic events that you want to be focused on really are forex. Sorry, not forex. Is the U.S. dollar, because when you're trading the U.S. dollar, that move, whatever happens to U.S. dollar tends to affect gold. So if the U.S. dollar moves and expands because something happening with the currency, supply or demand related, then that's going to make the market move on the screen, hence gold. And you can utilize this economic calendar as a way to plan out your setups and expect setups. So if there's US dollar news happening, let's say Wednesday, I can expect gold to move Wednesday, whether that's positive or bullish. Now you don't need to know, like I said, the specifics on the fundamental analysis on if you're a fundamental trader maybe, but if you are more of a technical trader and your strategy is mainly on the charts, all you need to do is apply the fundamentals. And you can simply apply the fundamentals by understanding that the news simply moves the market. When there is a news, when there's economic events on the calendar, that's going to move the market, whether I'm trading futures or forex. It's that simple. And most of my setups actually are from the economic calendar. So whatever I'm trading is based off the economic calendar. The only reason I'm trading gold today is because no, there was not U.S. dollar news on the economic calendar, but we have some news that wasn't shown on the economic calendar that I use on the other website. I had an article on gold that added this demand that you're looking at on the chart. This demand, this big blue candle, was created by demand. When you're trading fair value gap, supply and demand, you need the expansion to be you need the expansion first before you see the gap, the fair value gap or the order block. So you can't find these trading setups unless you can understand when there's going to be demand in the market. And another way that helps you is if you do market structure. So right now, I actually had prior market structure on gold. Since it moves slower, I used the 3-minute time frame and the 5-minute time frame for market structure. Sometimes the 15-minute, but mostly that time frame. Right now, I'm waiting for gold to come back down to this fair value gap right here on the 5-minute chart that you can see that the blue arrow is pointing to. This gap is what I'm waiting for. Gold is currently at a high price. It's at $31,000. Sorry, it's at $3,119. I need gold to lower in price before buying it, because if you think about it, if you're buying something in the stocks, forwards, futures, it's smart money investors that have a lot of money. They're not going to wait and buy an asset when it's already green, when prices are high and expensive. They already bought low, or they are going to wait again for the market to come low. If you didn't buy low, you just need to wait for the market to come low again by crashing or by decreasing in price. So basically, if you're buying gold, when gold decreases in price, basically that's when you want to buy. And when it decreases in price, hopefully, if you're trading the fair value gap strategy or order block strategy or whatever you trade, gold's decrease in price goes and fills in the inefficient price action of the fair value gap, which is right here where I'm drawing the gray box, and comes down and taps this not with minimal drawdown. Because when you have fair value gaps, a lot of the trade setups that you're going to trade are going to have minimal drawdown. So what that means is price isn't going to hang around and hang out within your stop loss. Price is going to come down to your stop loss, and then it's going to hang out, and it's going to not hang out, but it's going to tap with a rejection candle, a wick, and then you're going to see it immediately immediately go off. And people are like, oh, you can't get trades like that. That's not possible. It is, it is possible when you're trading smart money, because smart money isn't there to play games. They're in the market to mitigate positions, to take entries, and they tap and go. That's how their entries are. They enter the market and they immediately go. They don't hang out because they know what they're doing, all right? So this is just my short video on fair value gaps and trading gold, and if you're a futures trader. And I hope this video helped you. And if you like it and you want to join my free Discord, it's right in the Discord section. But yeah, peace.